especially in the latest advances in AI, to find signals in the market, short-term, medium-term, long-term, and then trade these signals in the live trading room. I have Keith. We have Keith who joined us. He is ex-market maker. I think he has master's or PhD in mathematics. Market maker, very analytical. So I'm glad we do. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. If this is the first time you see these disclosures, I encourage you to visit optionscreener.com so you can understand the risk associated with trading stock or options. All right, let's look at the stock forecast toolbox. So the model predicted 601 to be overhead resistance, 596. 600 has been a very kind of a psychological level, just like 100,000 on Bitcoin, where the markets are kind of looking for direction. Short-term markets are overbought, right? They've been struggling to break through 600 level. Basically going through a period of digestion, right, between NVIDIA earnings, the new administration, PCE data. It needs some time to digest, right? So NVIDIA dropped below 50-day moving average. It's retested successfully, was able to hold down to the August highs that we broke back in October. So we're back to the August highs, right? This is October, November lows. Success we had, but nonetheless below 50-day moving average. If you look at SMH. Right, below 200-day moving average, right? And that's very hard to digest, right? Usually semiconductors, especially NVIDIA, this is a proxy for economy, for growth, AI. What is going on, right? There's no good explanation that I heard, right? I mean, obviously overbought, obviously high multiple, but so do other sectors. But maybe it's more overbought than others, maybe. But nonetheless, estimates, we pierced the 200-day moving average, 2 Bollinger Band, right? 2 standard deviation move to the downside, extremely oversold. I still think if you think that we're in a bull market, that you buy semiconductors. Obviously, if you think we're approaching recession, then these are the warning warning signs. Actually, when did SMH stopped out in 21? Let me see. Actually, ran and start pulling back together with the rest of the market. I think small caps were the warning in 22. Small caps started dropping, in November. They reached the peak in November and then kind of gave kind of a warning sign that, listen, it's not a soft landing and maybe hyperinflation because of the new administration. Maybe unemployment ticks up and we're heading into recession. We'll see. Hard to say. For now, that's a sign of concern. Other than that, not sure if there are any other signs of concern. Small caps, new all-time highs, continue to grind higher. Participation, all-time high, continues to go higher. Same thing could be said about basically any value stocks or Dow Jones, right? We're making new highs. Whether it's banks or industrials or transportation or consumer discretionary, you see the same charts. You see the same charts across the board. So outside of semiconductors, maybe healthcare, things are looking up well. Bitcoin has been a good proxy. It's digesting, right? It touched 90,000, it held. We're back to 100,000, just like S&P, it's waiting to digest the news. Japanese yen pulling back, but stable. Dollar pulling back. So that's a good sign because we had some issue. One of the also their argument is that nobody wants a strong dollar, right? Strong dollar is signs of recession. And we did have a vertical move to the upside from 100 to 108, and now it looks like we're pulling back after the PCE data. 10-year yield also dropping, right? So you have drop in 10-year yield, drop in silver continues to drop. So that's a head scratcher, but we'll see. And, obviously, their argument is also that, sorry, I forgot, outside of semiconductors, it looks like not a bear market. What are we down? 11%, but right, and really big correction in China. Right. Okay. By definition, bear market. But anyway, so there are some signs of concern. There are some signs of hope. And so what do we do? What do we do? I still think from seasonality point of view, right? From seasonality point of view, we have more people joining. Anna, welcome back. All right, glad you were able to join. So from seasonality point of view, usually, unless there is some kind of an event with 70% correlation with November, December is high, right? Christmas rally, Thanksgiving rally, window dressing. It starts end of November and usually continues into December, right? Unless there is some kind of an event. But assuming no events, this is the bullish time of the year. Then January, February could be volatile, right? Usually January, February is volatile, especially around expirations, right? A lot of sell-offs happen in January or February expiration. So not that sell-off, but pullbacks, 5-10% pullbacks. So that remains to be seen. But going, for the next month, I think it's pattern of higher highs, higher lows. The only event uncertainty is, coming. Will there be a rate cut in December or not? And what does unemployment data looks like? If there are no kind of surprises, I think we're just heading higher, pattern of higher highs and higher lows. Any questions in terms of macroeconomic conditions, earnings? Zoom does not want to sell off. It kind of rebounded. So that trade is going against me. Right, so it did not reach the 84 strike. If you did Dell, I think this was, yesterday Keith was, but if you did Dell or HPQ, they're down both 12%, kind of sharp pullback. That's bearish. What else? In terms of stocks that I own, strong uptrend. Royal Caribbean pulling back, but still strong uptrend. Utilities, SRE. Sempra pulled back, but recovered most of the losses from yesterday, so it's up 1%. Oracle is down sharply. I'm still in the money. Let me look. What's the spread? Still in the money spread, but this is something to keep an eye on. Some of the mega cap technology has been under pressure. So 175, 180. So it's getting close, right? I need 50-day moving average to hold. So I do have 175, 180 spread. I'm not sure why the Oracle is dropping so much. Not sure. I mean, volume is small. It could be just rebalancing, right? Window dressing, rebalancing, people taking profits. That's also possible. So that's Oracle. Wells Fargo finally pulling back slightly. Other semiconductors, OKE, energy looks like it's finding the bottom after this sharp pullback after the new administration, Department of Treasury nominee. Tesla pulling back, but finding support down 0.5%. Google is flat, Meta is down 1%, Microsoft down 1%. What else? Spiders slightly down off the session lows, and QQQ down 80 basis points, same is down 1.5%. Any questions? All right, so you can also, the signals, you can find them in Aggressive Power Trader. So we have technology, Dropbox, JBHT, DBX is, or is it the Dropbox? Yeah, it is Dropbox. So some of the technology stocks on a strong uptrend, but obviously people are taking profits. Transportation and utilities, right? That's been a theme of rotation into the value stocks. So JB Hunt, transportation, trucking, and Triple M industrials conglomerate trend. NVIDIA NVIDIA is, let's analyze NVIDIA. So very bearish, right? This is considered to be a bearish price pattern below 50-day moving average. Testing 130, right? We talked about 130, that's kind of a line in the sand. It's a problem, right? If the bears are able to push NVIDIA below 130, right, and 130 level. Right, if I look at the gamma exposure, which is basically showing you all the buyers of puts and calls at each different level, and that could act as a support or resistance level, right? That's kind of the idea. I mean, you have 134, but 130, there is really nothing below that in terms of position, right? Very low position. NVIDIA, so it's vulnerable. It's below 50-day moving average, and it's retesting this level. If it drops below 130, I mean, it opens the doors basically to 200-day moving average. So it could be 110. I mean, we had these sharp pullbacks before in NVIDIA. So it could be that. So if you contrarian, you can say, Vlad, okay, as long as it's above 130, I'm a buyer because it goes back to 150, right? Or if it drops below 130, I'm going to go short or sell, which is totally fine. So if you're short-term aggressive trader, you can take the other side of the argument and say 130, we will not break 130. And if we do, then I'm out. Then totally fine. I'm not sure. Semiconductors are very weak. There's no earnings. I don't know what the next, trigger for semiconductors, right? And why they're so weak. Maybe it's the new administration. Maybe they'll put more sanctions on some of the semiconductors, especially in China, or not allow them to sell to China, right? So it could be part of that trade, right? They're just more sanctions. But again, since administration is not going to take place until January, and this is not going to be their first primary goal, it's hard to say what the next catalyst is. But short term, it's oversold. I would consider, if you were short, then this is where I would close my short. If you want to be long, maybe a small position, just make sure that 130 doesn't get break, because if it does, nothing until 120, 110. Anna, let me know if it makes sense. All right, what else? Let's look at Dell. It's kind of not going anywhere on Dell. And HPQ. HPQ looks like it's trying to recover. A pretty steep sell-off as well. All right, anything else? So market is closed tomorrow, and then Friday is a half a day. So you do want to review your position. All right, so let's talk about some of the stocks again. Let's just quickly go over them. So I do have small position. Nice rebound, right? Just like NVIDIA chart, right? It broke through this long-term, the breakout, right? Dip below 50-day moving average held, and now it's back. Very similar to price action in NVIDIA. For now, I'm long Amazon. For now, maybe even buy again if it pulls the 50-day moving average. American Express, similar, right? Above 50-day moving average, above this elections gap, right? So still strong. We talked about OKE. I know I'm repeating, but some people came in late. Oracle, so I'm long still, so I need 50-day moving average to hold, but this is kind of the line in the sand, 50-day moving average and post-election gap. If it drops below 50-day moving average, then the trade can be in trouble, especially December, right? It's December spread, so I don't have a lot of time. What else? RCL, still a strong uptrend, nothing has changed. We talked about SRE, right? We talked about Tesla. Tesla, I sold half of the position, I'm thinking about maybe 310, 320 is where I would maybe buy it back. So I'm kind of waiting for this rebalancing. So that's Tesla. We talked about Texas Instrument, kind of similar to SMH, not very good. Texas Instrument, I have a stock position, so at least I have time to wait. XLF is another spread, and it continues to make new highs. So at this point, it's, I mean, last sale shows 410. I bought it for 380. So it's about 5 to 7% up on the positions. Mahfouz is back. How are you? I missed you. All right, Patrick, Mahfouz, Fred, Brad, Anna, Alon, Jeff, John, welcome back. How you guys doing? Fred, triple M in depth. Okay, let's look at triple M in depth. Let's look at the gamma. I mean, it's not the most liquid name, so I don't know how interesting the gamma is, but it is. Okay, so 140. Right, so people are selling 140 strike. So if I buy, I would say, okay, sell 140 call, right? If you have large account, you buy in the stock, maybe you sell 140 call, maybe you sell 140, 145, or 140, 150 spread. On the downside, it's pretty well positioned till 130. Nothing is below 130, which is not that far. But 130, you know, I mean, 126 is well positioned, right? You can basically say, well, it missed the earnings, right? It had a great earnings in July. It missed October. It had post-election gap, along with the other, you know, industrials. Longer term, it's weaker than other stock that did not close the gap. So that's a concern. You already kind of see a reversal, right? It gave up all of the gains and some. You know, I think obviously 140 is your overhead resistance. So I would be a seller of 140 level. You know, 130, 132, 128 is where you might incrementally start adding to your position if you want exposure to industrials, right? If you want exposure to industrials. Then usually right away I look at XLI. You know, XLI looks better than triple M. Maybe instead of triple M, then maybe go to XLI, right? Why take the risk of individual stock? I mean, we had a signal in triple M, so that's why I added it. But that's always my thought. Like, am I better off buying? I mean, but XLI is also overbought. It could pull back to 50-day moving average as well. But that's my kind of thought process. And you can look at the puts and calls. So half, right? So for every put, there's a call. Nothing exciting about put and call. No big, there's no bias one way or the other. Expected move, right? You can look at the expected move in terms of, you know, how much it moved. And obviously, you know, December expiration, you know, it could be $140 stock, it could be $125 stock, right? And then what else? Volatility. So implied volatility, 30-day volatility. So implied vol, 23. So implied volatility is low, historical volatility low right after the earnings, right? After the earnings, it all dropped. Into the earnings, it will rise, right? So this is where you buy puts and calls, right? Because volatility is kind of low. And the IV rank, IV percentile is low, IV rank is low. Cup and handle for triple M. You need a catalyst. It does look like a cup and handle. I do. but you need above average move to the upside, right? When you have these false moves and low volume, then this is not a confirmed breakout. But the problem, you have a lot of overhead resistance. So if you break 136 and you try to catch 140, then this is a good trade. But you need a big volume, because if we're broke above 50-day moving average, now we're reversing, giving up all of the gains, at least short term, that's not a good, strong pattern. Thank you, Fred. Appreciate my fools, Patrick. Good job. Any questions? All right, my favorite topic, earnings. What else do we want to take? Are there any interesting earnings after the close? No, everybody is going. So first of all, happy Thanksgiving. I really appreciate you guys showing up right before the Thanksgiving, and we have actually more than average attendance. So I appreciate each and every one of you. Happy Thanksgiving to you and your family. I hope you guys gonna enjoy time with friends and family. We're off tomorrow. Markets are closed tomorrow. Friday, half a day. But thank you for being here. I really appreciate that. And then Friday before the market opens, let's see, is there anything interesting? There's nothing interesting. Okay, so earnings, we're done with earnings for this week. Any questions? Luna always gets a lot of being very mean, and her being sick, from overeating. And I sent all my family members and say, thank you. Luna wants to thank you for overfeeding her. And then my wife screams at me like, oh, okay, we're here to have fun. Why are you making everybody uncomfortable? I'm like, well, yeah, you're sleeping and I have to deal with the dog, with your dog, by the way. And, she's sick and, I'm the one who's taking care of her. So I don't want people to overfeed her. So nothing's going to change. I'm sure it's going to be the same way, but it's, maybe I should write a blog about that, overfeeding Luna. Ooh, that's a good topic. So I'm going to write a blog, overfeeding Luna. On Thanksgiving. That's a good topic. Thank you, Fred. All right, what else? Updates. So PC data, it came in, I guess, better than expected, right? Because the most important chart, my biggest area concern was always the yield, right? If I can kind of understand the semiconductors, not really, but this I didn't understand, right? This high, move to the upside. I understand that potentially it's due to the new administration, but it doesn't help market. So the fact that we're dropping after the PCE data, and we went from 4.5 to almost 4.2. That's bullish for the market, right? That's definitely bullish for the market. Right, we have PCE data come in, I think a little bit better. There was a 0.2. Either in line or better. Personal income came in better. That's good. Chicago business barometer that continues to deteriorate. GDP is in line. Okay. It looks like in line with expectations, right, based on the yield. Values flat, spiders are slightly lower, so not a big, nothing that shifts the equilibrium between bulls and bears. Losses a mega cap and chip maker limiting in broader equity market. Okay. So yeah, obviously the Dell is not helping, right? These are all kind of AI. They had a huge rally on AI theme, and now they have a big pullbacks. And that has been theme of the AI. Before, if you say AI 5 times during press conference, your stock moves higher. Now you can say it as many times as you want to, but if the balance sheet that doesn't support that, you get punished, right? You kind of have to give up all of the gains from the last, few earnings that you did. So that's been the theme, whether it's Dell or HPQ. Obviously, if you can deliver like Pelletier, then you get rewarded, and you seems like it delivered, but maybe not everything is painted in bright colors, and then you get at least the pause in the rail. My favorite sector going into the year, and I think the banks, the drop in yield curve normalization, I think banks are XLF, whether it's Morgan Stanley, right, whether it's JP Morgan or Bank of New York. Like every week I'm getting signals on these stocks. And same things, on some of the regional banks, MTB, PNC, right? KRE in general, right? These are a lot of signals. So banks has been in strong uptrend, right? But I think if I had to pick one, I would say either banks or small caps, right? Especially the new administration, if you go back in time, right? If you travel back to 2016 when Trump won his first elections, right? Small caps, they responded, right? And they continue to rally. History doesn't have to repeat itself. 2024 is different from 2016, but at least if I have to pick one, then maybe small caps as well, or IWR, probably even better. IWM is more speculative. I think IWR, it's kind of nice ascent to the upside. Best year-end ideas. Thank you, Fred. Yeah, those are good questions. I'm long small caps. I'm long banks, right? Technology stocks also look similar, right? Banks cannot go very far without NVIDIA, right? If NVIDIA is going to continue to deteriorate, it will pull the banks along. So if you're bullish on the market, then NVIDIA is also kind of maybe, as long as it doesn't break 130, is a good buy. If it breaks 130, you're in trouble. Not you, but NVIDIA, right? If it breaks through this uptrend, then we're in trouble. Bulls are going to be in trouble. I've already broke once. So I would watch these levels, 130. We don't want to, bulls do not want this level to be taken out. All right, it's 2:40. Any other questions? Because I don't have much else to cover. Let me look at my HPQ and Dell and how much I'm going to wait till Friday. You do have these rebalancing acts. Bell. They do HPQ and Dell puts. So put butterfly, so that's been working well. All right. Any other questions? How's our YouTube audience doing? All right, 4 people watching. Okay, all right. That's good. That's good. All right. If lots of thanks for lots of open interest in XLF thoughts, lots of open interest on XLF. Let's look XLF. Interesting that there's a vol. I don't know. Well, 11. I don't know how accurate this is, but so vol is subsiding, right? Vol is dropping after the elections across the board. So that's not a surprise. And then gamma exposure, just well, definitely on 53 strike. So it's going to have hard time breaking through 52, 53. Let's remove these guys. Let's see end of the year. So yeah, end of the year is 53. So I think it's going to have hard time getting above 53 level. So into the year end, if it gets to 52, 53, I would consider trimming XLF position. On the downside, you do have position, well, 50, not a lot. So also not a lot of positioning outside of 50. So that would be my thoughts on XLF. Put call ratio to 93. I don't know about 2.3. Volume ratio 246. Yeah, wow. Okay. So the volume wise, you do have. Wait, hold on a second. Put to call ratio. So 246 means a lot of put buying. Yeah, so more puts. Well, this is 1129. If I go to the monthly 1220, if I do go to 1220, higher open interest on calls. But the volume is very high in December. That is very interesting, right? It's 10 to 1 put volume versus call volume. So people are hedging at least into the end of the year. That is a good observation. Yeah, so a lot bigger put volume than call volume, especially in the December expiration. January, kind of nothing. But here, open interest is higher on calls, but volume is higher on puts. Well, it could be selling puts. I don't know if this is an indication of long or short. It could be selling, but we'll see. Yeah, 1 to 17. It's a big volume discrepancy. I agree. Not sure why. Not sure why. XLF. It's either somebody's betting against this rally, or people are just selling puts out of the money puts, because that's kind of a sure way to. Let's look. Hold on a second. Gamma exposure, XLF. I assume most of that volume is here. See, the open interest is here. That's the volume. Yeah, call volume 10 to put 1. Yeah, I'm not sure. Okay. But something to keep an eye on the put to call volume. All right. Any other questions? All right. Alon, Anna, Brad, Fred, Mahfouz, Patrick, Michael, Steve, Jeff, Bob, thank you very much. Have a great day. Enjoy. Thank you for being part of the team, part of the broadcast, and I will see you guys on Monday morning. So Monday morning in live trading room, we'll still have a broadcast, but there'll be no closing bell on Friday. So no closing bell on Friday because of the half a session, but we will have a morning bell. Thank you.